In this video, I'll discuss Q4 FY25 result and Concall of Netweb Technologies. Netweb Technology manufactures IT hardware like supercomputers, data centers, private cloud, and they also provide software support to their clients. So that is the main mode of the company, that they are integrated, they are fully integrated in terms of hardware and software. So that is the main mode of Netweb Technologies. They mainly provide supercomputing technology, private cloud, AI systems to their data centers, servers, to their clients like Indian government institute like IITs, DRDO, ISRO, universities who are working in the research field, and also to the portfolio management company like there are some hedge fund companies who are trading. I mean, they have a facility of what is say high frequency trading. So they also provide services for them for the high frequency data rendering. That is the main thing of the company. So their main if we talk about the revenue mix, their main segment is the high performing computers like supercomputers, and they started their business back in 1999 in this category, that they will manufacture supercomputers. So that is the thing, they get 35% revenue from this segment. Then they also provide private cloud, that contributes 35% in the revenue, and they have a growing segment in the AI. AI is growing rapidly for them. Last year AI contributes 11% to their revenue, but this year AI contributes around 15%. So yeah, AI is growing at a much faster pace than supercomputers and private cloud. They also have a data center facility, and we all know that how the data centers facility are important in the future because of AI training and all. So that is also good segment for them. Yeah, the segment is not growing as much as the other category is doing, but yeah, that may be some seasonality or something. If we see the E2E, they are also having a slowdown, so that can be a reason for them also. But yeah, if we talk about the HPC, I mean supercomputing division, they are doing oil and oil. So that is the revenue mix of them. And if I talk about the relationship with NVIDIA, they have a OEM manufacturing relationship with NVIDIA, and that is a really important point for them also, because they are one of the few OEM manufacturer of NVIDIA all around the world. So that is a strong point for the company, and that is the company overview. And let's talk about the Q4 FY25 result. So in terms of revenue, they grew by 56% in Q4 FY25, and they reported a revenue of 414 crore. And if I talk about the segment wise revenue growth, supercomputing segment grew by around 58%, AI grew by 80%, private cloud segment grew by 47%. So that is the major these three category have major contribution to the revenue. Around 85% revenue comes from these three segment, and these three are growing in a reasonable pace, and I can say it is growing about a very good pace. And if I talk about the guidance, management saying that they will grow by 30 to 40% CAGR for next couple of years. And if we see from the IPO, the management is guiding us for a 35 to 45% of growth. And if we see their execution in FY24, they grew by 60% in terms of revenue, and in FY25, means the last FY, they grew by 50% in terms of revenue. So they are consistently beating their guidance in terms of revenue, and they are expecting a similar kind of growth going forward. So that is the thing with revenue, they are growing in a really good pace. And then talk about the order book, because they are a contract manufacturer or contract service provider, it is very important where the order book is going. And they are saying that in their business, order book is not an important thing, because if we see the order execution time, it is around 8 to 12 weeks. Okay, so the thing is that the order comes and executed within the quarter itself. So if we see the order book, only order book, then it is not a good parameter to judge the company. So they are saying that in terms of the contract they will get, the pipeline and L1 order is more important than the order book. So if we talk about the pipeline also, they have a pipeline of 4,000 crore, and it has grown by 15% year on year from the last year's Q4, and L1 order book also grew by 15%. And if we talk about the L1 to order conversion rate, they have a conversion rate around 60%. If I am not wrong, they have a conversion rate of 60%. They have a pipeline to order book conversion rate of 60%. So that is a good amount of conversion rate. And if we see also in the last quarter, their order book was around 3,500. Okay, 3,500. But in this quarter, they have done a revenue of over 400. So that is right, that the order book is not a significant parameter in this business, but more significant parameter is pipeline and L1 order book. So that is the thing, the pipeline and L1 both are growing in a good pace, around 15%. If we look in the past also, this pipeline and L1 order book, in the past also they grew by around 15 to 20%. So that is a stable thing for the company, and it is a good thing. So that is the order book. And if I talk about the EBITDA margin, they done a EBITDA margin of they reported our EBITDA margin of 14.4% in this quarter, and year on year decreased by 80%. So EBITDA margin, if we see from the last 2 years, they reported EBITDA margin around 13 to 15%. The EBITDA margin has been in the range of 13 to 15% in last 2 years, and also in this quarter they have done a EBITDA margin of 14%, and they are guiding us for a 13 to 14% of EBITDA margin in the future also. So their EBITDA margin is very stable. So that is a good thing for the company, that the profitability is clear. So that is the thing. And if I talk about the PAT, they grew their PAT at 45% year on year in the Q4 FY25. They reported a PAT of 43 crore in this quarter. So yeah, PAT growth is also decent. They do not have the operating leverage in this quarter, but yeah, that we have to track that when the company will get the operating leverage. So that is the PAT result. And PAT margin is around 10%, 10.5%, and they are if we look at the past, their PAT margin also has been in this range of 9 to 11%, and they are also guiding for a PAT margin of 10%. So yeah, PAT margin will be stable in the coming years also, as the company management is saying. And also if we look at the past, then also the PAT margin has been very stable in the range of 9 to 11%. So that is a good thing for the company also, that the PAT margin is not fluctuating too much, and that is a good thing. And if I talk about the AI contribution, they are expecting AI to be contribute 20% of revenue in the FY26. So if we see, they are saying that AI will grow at much higher pace than the other segment like supercomputing and private cloud. Supercomputing and private cloud will grow around 50%, and with that AI will grow at much faster pace. So that AI will gain the revenue mix more. So they are talking about a 20% revenue mix in the FY26, and now they have a AI is contributing 50% to the 15% to the revenue. So that is the AI. And they have a cash conversion rate of, they have a cash conversion cycle of 70 to 90 days, and they will do that. They are guiding us for a 70 to 90 days of cash conversion rate cycle. So that is also a good thing. And if we talk about the other competition and margins, then the management is saying that they do not have any competition in the domestic market, because they are a integrated IT company in terms of hardware and software. And in India, in domestic market, there is no such companies who offers their client both. Their only competition is the MNCs, in the MNCs who are registered in the US, UK and other countries. So they do not have as such competition in the domestic market, but their main competitor is the MNC. And if we see the MNC versus their margin, PAT margin, so they have a higher PAT margin because they are fully integrated in terms of hardware and software. So that is the main mode of the company, that the client do not have to go to other company to get the software or the hardware support, because Netweb provide both. So that is a good thing for the company also. And as I said, order execution time, they have a order execution time of 8 to 12 months. So around 2 to 3 months they execute their order. So their order execution rate is in the range. That is why they are more dependent on the pipeline and L1 order book. So that is the thing with company. And they are growing their customer base around 10% per year on year. They are growing their customer base around 10%. And one risk factor in the company is the customer concentration. They have a if we look at their top 10 customers, they contribute 66% of their revenue. So yeah, if one of the customers slow down, then there is a problem for the company also, because the company is very heavily reliant on their top 10. So that is a little concerning for the company, that in the future how they will distribute their customer base. That is more important in the future. And if we see the repeat customer contributes 81% of the revenue. So that is also a good thing. That the customer is really happy with the company, that they are giving their project to the Netweb again and again, and it is in the range of 60 to 80% in past few years also. So yeah, I can say that the customers are really happy with Netweb. So that is the thing with Netweb. And Netweb is good enough company. If I see at the valuation metrics, in the growth metrics also, the management is executing their plan in last 2 years, as I see from the IPO. Okay, so they are doing a good work in the company. So let's see what will be in the future with this company. So that's it for the video. Thanks for watching.